Hello. Today is Saturday, September 28th, 2024. I am Jason Shapiro with crowdedmarketreport.com. Today I wanted to get into a little macro banter, just because of what's going on with China this week. I think it's important to sort of get into. To me, macro is dominated by the idea of liquidity. Is there liquidity in the system? Is it growing? Or is it shrinking? And if it's growing, then prices are going to go up. And if it's shrinking, the price is going to go down. And liquidity in this view is measured by money supply. And the total money supply is a function of two things. One, how much money is being printed, which is the money supply, which is numbers that we can get, right? That these are available numbers to the public. And two is the idea of the velocity of money, how many times that money supply turns over, which is not something that we know. It's only something we can figure out in retrospect, right? But this is what liquidity is. And just to give a simple example, if you and I live on an island and there's $1 in money supply and I have it and I buy something for you for $1, our GDP is 1. And then you buy something for me for $1. Now our GDP is 2. Okay. And that's all we did all year. So our GDP for the year is 2. Next year, we print another $1. Okay, now our money supply is 2. Now I buy something for you for $2. You buy something for me for $2. Our GDP is 4. That's all we did all year. Okay, now we increase the velocity. We take those $2. I buy something from you twice during the year. You buy something from me twice during the year. Now our GDP is 8. Okay, because our velocity went up. And obviously it's a very simple example, but just to sort of give a general idea of money supply and velocity. And it's only after the fact that we can say, oh, well, the money supply was 2, the GDP was 8, so the velocity was 4, right? We can only see that in retrospect. But if that's going on, we can kind of look and say, if this is going on, then asset prices are going up. Well, asset prices are going up. You know, stock markets pretty much on all-time highs. Gold, pretty much on an all-time high. You know, Bitcoin is pretty high, pretty close to an all-time high, et cetera, right? So that to me is what macro is. Is this liquidity there? And clearly, when it's not there, we know that these central banks like to provide it. They can provide it by cutting interest rates, you know, is a way to increase liquidity. They can just print money. They can give money away. They've done all these things, right? And this has really become a thing since 2008 when they decided that that's what they were going to do. There was no liquidity in the system left. So they just printed a whole bunch of money and they created the liquidity and it worked, right? It saved the system. Now we fast forward. China, same situation. Everything's dying. What are they going to do? Well, they broke it out and they went create liquidity in a bunch of different ways with interest rates, with reserve requirements, with banks. They're providing liquidity, right? They're increasing liquidity. They don't know what's going to happen with the money supply, with the velocity, but they're certainly increasing money supply. And so far, that's worked. Chinese stocks went up a lot since they did that. Other assets, gold and things, copper, things like that have gone up on the back of that. So far it's worked. But my first issue is, what happens if it doesn't work, right? You have to remember, in 2008, when they did this, it was actually seen as bearish at first. People thought that this was very inflationary, so that was bearish. People thought that this was sort of socialist type of activity. That was very bearish. And they faded it. The macro people faded it, which to me is why it worked, or one of the reasons why it worked. They were selling, and like when they always sell, they get squeezed. They have to buy back, and things went up, and it worked. Okay. Now we see liquidity as, the macro people see liquidity as the ultimate savior. As you can see what happened in China. China didn't hesitate on this, and this stuff went straight up. People have gotten very bullish now all of a sudden in China, and rightly so. It's been working. But again, what happens if it doesn't work? You know, the situation where it doesn't work is that, okay, you can create all this money, but somewhere, somehow, at some point, there's a limit to this. I'm not saying we're at it, But I'm saying when we are at it, there's potential for problems. So I don't know when we're going to be at it. I don't know how to measure what is the maximum that people can print before it ends up bad. But the markets will tell us, by rejecting it. It will reject the currencies. It will reject the fixed income securities of the countries that are doing this. And when that happens, you've got a problem, because then you just have to print more and more and more. And then obviously that becomes very inflationary, and it just goes down a spiral, right? The more inflationary it gets, the less people want to take your money, the less people want to take your bonds, and it just becomes a problem. Again, I'm not saying we're there, but I'm saying you have to watch for these signs to know if and when we are there. Because if we're there, whether it's this year or in 10 years or in 20 years, if we're there, there's going to be some serious problems, and you're going to want to try to avoid those problems at the very least, or try to profit from them. Now, here's the thing, and I go to these charts. What does it mean for the stock market? We don't know. That would seem to be a very bearish scenario, right? But we have a couple examples here where it wasn't a bearish scenario. There are examples where I'm sure it was a bearish scenario, but this is the famous Weimar Republic, okay? This was the inflation during that, which is extensive, right? And this was the devaluation of the currency during that time period, which was extensive, okay? And this was the stock market in Germany during that time period, which just ripped higher. Why? Well, I don't know, but I can make the argument that if there's all this money, right, and all this inflation, stocks are also an asset that can go up as money supply is increasing and liquidity is increasing. Although the currency is devaluing, stocks can go up just like everything else in that period. The prices of things are going through, hyperinflation. Well, stock prices can too during that. So it doesn't necessarily have to be bearish stocks. Here's the example of Argentina, which is much more recent, right? This was the devaluation of the Argentine peso since 2016, which really started accelerating it around here, right? Big devaluation in the peso, okay? And here's the Argentine stock market in that period, okay? A ridiculous rip higher for what I think is the same reason, right? It's just another asset. And, if the peso, instead of you need 1 peso to buy something, now you need 1,000 pesos to buy something. Well, 1 share of stock can be the same thing. It used to be $1 and now it can be $1,000, like it's just an asset. It doesn't have to happen this way. All I'm trying to point out is, even if this macro thing of printing money and all that does blow up in everybody's face because there's too much debt, it can't be serviced, nobody wants it. Now the currency is devaluing. Nobody wants a devaluing currency. Nobody wants to lend money to a country with a devaluing currency, so the whole thing spirals. Doesn't necessarily mean that the stock market has to go down. There's better ways to play it, like shorting the fixed income securities of that place or shorting the currency of that place. Clearly would be a better way to play this stuff, in my view. So again, just something to think about. I don't think that we're at that point yet. I don't know if we will get to that point in my lifetime. By fighting this whole thing, you're basically fighting City Hall, especially when you're talking about the U.S. We have the U.S. has the reserve currency of the world. So to break the reserve currency of the world, you're really fighting the biggest City Hall in history. Can it be broken? Sure. Is it going to happen overnight? Probably not. The U.S. is not really throwing. Yes, they're cutting rates, so they're stimulating a little bit. I think the problem will occur is if assets start to fall. And they have to feel like they have to provide more liquidity again, right? We get into another problem like we saw in 2008. All this housing stuff starts to fail. Interest rates start to go up while they are cutting rates. The currency devalues, and we're getting some of that, right? Interest rates have gone up since they did this 50-bit rate cut. The currency has been devaluing. The dollar is pretty close to recent lows here. So it's something to watch for, because then if they have to come, and the stock market's fine, obviously now, but should that go the other way and it starts to fall and asset prices start to fall, they're going to have to provide liquidity. And they're providing liquidity as a government that is very deep in debt, as we know, which hasn't mattered. Look, people have been talking about that since the 80s. It hasn't mattered. Hasn't mattered. But when it does, if it does start to matter, right, you're going to have to print a bunch of money and get people to accept it when you have huge amounts of debt. Something to watch out for is all I'm saying. I know this is a hugely bearish argument. I'm not on this bearish argument right now. All I'm saying is I'm trying to point out that this is things to watch for should these occurrences happen, so that you can watch yourself in this. All right. And again, my point is, it may not be the stock market as a thing that you want to be short. Be more pure about it. It would be the bond market. It would be the currency that you would want to be short in this scenario, right? Which is not today, right? Should these things start to happen, should I start to see them in the market, should they start to manifest themselves, I will be talking more about this as it goes on, but this is just sort of an early warning shot across the bow to keep an eye out for, simply because of what happened in China this week with their huge stimulus, and that could be a place to watch for it now. Okay, so those are my thoughts. I hope that you enjoyed it. Please like the video if you did. Always happy to hear questions and comments. This one, look, you can argue me all day on this because there's a ton of things to argue with on this. Check us out on crowdedmarketreport.com. We have a Substack, free Substack. We're on Twitter. All that good stuff. Okay? Thank you. I hope everyone had a good week. I hope everyone has a good week coming up, and we will talk again soon.